Welcome back to the Carbon Exposure Project, where we dive deep into the ideas, markets, and people shaping the future of climate finance. In this episode, we sit down with John Sharp, an investor whose path to climate finance is anything but ordinary. From a background in music as an orchestral conductor to tech entrepreneur and venture capitalist, his career has spanned industries and continents. Now, his focus is on the frontier of decarbonization. In 2022, John co-founded the Carbon Nation Fund, raising hundreds of millions to back nature-based carbon projects across Australia. But when the voluntary carbon market unraveled just a year later, he watched confidence and capital vanish almost overnight. That experience transformed his approach. Through his firm Hatcher, he is now focused on more bankable, infrastructure-backed climate investments, from green steel and green cement to the ambitious EarthGuard project, a space-based solar shield designed to buy humanity time in the race to net zero. This episode is a fascinating look at how climate investing is evolving, more data-driven, disciplined, and ambitious than ever. Welcome to the Carbon Exposure Project.
John, it's great to see you again. Thanks very much for the hospitality here in the Zen Garden here in Singapore.
You're welcome, Renee.
It's good to get a chance to sit down with you. And I think something that would really benefit our audience is to gain your perspective, which is a very interesting perspective from that of an investor. So can you start by just giving us a little bit of your background as a venture capitalist, and then we can dive into some of the more specifics around carbon markets?
Sure. Well, like all of us, straight line from school.
Straight line.
Yeah, straight line.
Exactly.
Yeah, no detours. So I actually started out life as an orchestral arranger, conductor, music producer.
Fantastic. I did not know that.
Yeah, did that for 10 years. Super fun. Standing in front of an orchestra and conducting them is probably about as good as it gets.
Yeah, wow.
The air actually moves. It's a really fun gig. But it was actually the first occupation really to be disintermediated by software. Mm-hmm. And so I remember sitting in Sydney one night with the concertmaster of the Sydney Symphony Orchestra and saying, we're going to fight these computers. And I'm 24 years old or whatever I am at the time. I'm thinking, I've seen Terminator. I know how that ends. I think I know how that ends, like in the real world. So I actually started getting into computers and software and digital waveform analysis. And one thing led to another. And I ended up sort of going into that sort of side of the business.
Yeah, right.
And going into sort of more of that digital-based production and what have you. And then one night I was out with a bunch of guys and we decided to do a music television network for Asia. This is pre-MTV. And so we thought, let's do a Chinese language music television thing. We'd obviously had far too much to drink, but we did that and it was very successful. The joke was at the time when we sold this that we were the first people to make money out of satellite television in Asia. And then after that, I worked in the space business for another few years, which is super fun. And then I left that business because I was pretty convinced there'd be no more innovation, going on there. I wasn't envisaging rockets landing by themselves and the Starship booster be getting grabbed,
Exactly.
by the claw and all this kind of thing. So I left that and I started a cybersecurity business. Had an amazing antivirus software that was developed by some people in the group. We sold that business in 2011. Came back to Singapore, started investing in startups, realized that investing is and still is for a lot of people a very manual business. So over the last 10 years, I've been developing automation technologies. My partner, Dan Hookturp, has been developing AI-based ways of digitizing venture capital, digitizing family office operations. So that's kind of what we do now. We're investors still. Mm-hmm. But we've developed a pretty amazing investment platform at Hatcher. I've just spent the morning demonstrating it to actually family offices in Australia, both where we're from.
We're from, yeah.
And including a couple of guys that are invested in carbon, by the way. So I'd say my sort of current focus is number one, I'm an investor. Number two, I'm an investor with who's also a coder and interested in the next phase of what investing looks like in digitizing that whole process. Mm-hmm. And number three, I think, like yourself, I'm intensely interested in what we can do to save the planet on the basis of having the Paris Agreement in place and on the basis of what we can do with decarbonisation and everything there. So first an investor, second like a coder, and third perspective is really someone who's an investor who's been working in the carbon business for the last 2.5 years and gradually coming to understand I've come to understand is a very complex area, and you know this better than anybody. You've been working in when did you start working on this?
I started working in carbon markets in 2008. So it's fair to say I've seen a fair few ups and downs throughout that time.
Mate, that's a long time.
It's a long time. So either I'm extremely patient or I'm extremely stupid. But I haven't, or maybe both. I haven't deviated since I began. I kind of found my calling, and I really love the community. But it's certainly a market that's never boring. That's for sure. But I think it's
100%.
sometimes overly complicated, just for the sake of complexity, and it ought not to be.
Look, what I find is whenever I'm at a conference talking about carbon sustainability, I think it's really necessary sometimes to go back to the core aspects of this, like what
First principles. Yeah.
First principles. What is a carbon credit? Why are we even capturing carbon in the first place? What is the Paris Agreement? There's a lot of misunderstandings or just outright assumptions I think are going on in this business. And I would characterize my journey, which is very recent compared to yours. I started looking at this in 2022.
Yep.
And so I'd characterize my understanding is going from bright lights, big city, kind of look on my face, in carbon to sort of slowly understanding the complexities, the problems, and the massive scale that's needed to actually get anything done in this space.
So that's a really interesting point, because 2 points. Firstly, the timing of your entry into this market as an investor. I want to dive down into that lens and your perspective. And then sort of secondly, I lost my train of thought. So what was I going to say?
Well, we can dive in the first one.
Let's dive into the first one in terms of your lens around as an investor, specifically with regards to that timing you came into this market.
Yeah, so my cousin in Australia, Nigel Sharp, runs a very successful ag tech fund in Australia called Tivitt and Rothwell. And he and the people around him have a really deep understanding of particularly nature-based solutions. And they own a group out of Sydney called Carbon Neutral, run by Phil Ireland, who's another guy with deep expertise, and you know all these guys.
Yep.
And so Nigel called me up and said, "Oh, look, I'm thinking of pulling in some international capital, to invest in nature-based solutions in Australia. My understanding is that at Hatcher you can spin up a fund really fast. Could you do that?" And I said, "Yeah, sure." So I spun up a fund. We called it Carbon Nation, which was which you're now familiar with. And so we spun up a fund. We called it Carbon Nation with the objective of bringing in international capital to invest in nature-based solutions, primarily in Australia. But as I spent the next few months figuring out what was going on in investment in carbon, of course that introduced me to the areas of not just nature-based solutions, but also Cookstoves. Mangroves is one outgrowth of nature-based solutions, and so then it started to become very interesting. And we set about as co-GPs, we set about raising capital into this fund, and we're quite successful.
Just qualify that for us. So how much money did you guys raise during
that time? We raised $250 million in 6 months.
Yeah, wow.
And we had on the hook, we had about another 150 million that we could draw down from a separate group. So from one group, we got 250 million committed.
So 250 committed and potentially up to 400 with an extension.
Correct. So we had a lot of money we could spend. We could buy up farms in Australia that were millions of hectares at the time, and mangroves. We could do a lot of funding for that. So we closed this in December timeframe. We were high-fiving each other.
In December 2022.
22. And I'm thinking this is brilliant. We're going to, all going to do a lot of good, going to make a lot of money. It's going to be a lot of fun. And then, of course, we all know what happened in January.
Markets were already cresting down
at
that point in time because broader geopolitical
everyone
context.
But I think everyone thought it was a blip,
Yeah, everyone thought it was transient at the time.
Yeah, exactly. In December, I think everyone's always suspicious of year ends and seasonal stuff. And I agree with you.
Retirements were okay in December 22.
But it wasn't. It wasn't
the end of the world.
No one was even really, no one we were talking to was even mentioning this in the context. They were just more like, let's get cracking, let's go and buy a few farms. And so I think at one point we had 30 projects that we're looking at.
Australian,
mainly in Australia.
Active markets?
Yeah, but everything from little 15,000 hectare things. I think one of them was like 3.2 million hectares.
Wow.
And I actually presented that to a group in Switzerland, and one of the guys in the meeting said, I think that's probably around the size of Switzerland.
Maybe bigger.
And we went and looked on the map. We figured out Switzerland was a little bit bigger, but
Right.
it's to be one of those big sort of things that Australia, you're familiar with the concept. But yeah, so that was December. And so we're all thinking, this is fantastic. Let's crack on.
And then tell me what happened.
January, an article came out, I think it was January 23rd, if I recall, in the Guardian, saying that all of the calculations behind the Vera methodologies and the, by implication, the gold standard methodologies and whatnot were screwed up, and they've been over-crediting. And so I think, like yourself, your reaction probably at the time was, well, this is interesting, but it's the Guardian, and it's newspaper. Is there any truth to this?
Yep.
I think it wasn't until February when we saw the actual scientific data that this was based on. That's when the markets really began to crash.
Yeah.
And that's when the whole thing was suddenly the shine came off our original sort of view of the world in December. But all that changed it changed in 3 months, but it probably took another 6 months to kick in. I mean, what was your view on this?
Yeah, it was a pretty difficult time to be in the market because the sentiment.
Because you were trading at that time, right?
Yeah, that's right. Yeah,
you were actively trading.
Well, I was at the exchange, and so my clients were actively trading, but we were at the nexus, and the sentiment turned really, really negative very, very quickly.
Sure.
A lot of the outside capital that had rushed into the market effectively started to pull back. A lot of those marks started being marked down continuously, and basically the sentiment was risk off, and so we saw the benchmarks really retreat significantly as a result of the lack of confidence with regards to the baseline and the crediting. Interestingly enough, at the time, Vera had been going on with behind the scenes work on the new methodologies for VM0048 for Red Plus and unplanned deforestation.
I didn't realize that. So this had been going on before the crisis.
But they did a not a very good job, let's just say, with regards to public relations, and they came out with that change seemingly in response to the criticisms.
Although I'm learning something here, because I actually thought it was in response to the criticisms.
So the Guardian made it seem as if that was the case, but it was just not very well communicated.
Right.
So it ultimately what ended up happening was a loss of confidence. Still to date, even though that methodology was obviously announced then and has undergone obviously some further changes, there's no projects that are yet registered currently and gone live in the market as of December 2024 that are live with that new methodology.
Wow.
So there's quite a long gestation kind of period for those projects to come through with that revised methodology, but also there's a disincentive to project developers to take this huge haircut. So now we're stuck in this kind of no man's land for a little bit longer, whilst obviously things start getting implemented. And you got the background of jurisdictional, baselines and these kind of dynamic baselines within the voluntary context. It's pretty interesting.
It's a tough time, I think, for the voluntary markets.
It has been.
Yeah, it has been, and I think it'll likely turn around just because of the need. But
I do agree with that. I think what we're sensing, certainly, we've seen pickup in trading activity, and obviously I've set up a new shop. It's called Voluntary. Obviously launched it in April of this year, and we've got an 8-month track record. But we see consistent trading and certainly a pretty steep pickup in Q4 of 24, which is the cyclical kind of nature of corporate.
What's the bulk of that trading, would you say? What kind of credits?
It's probably a 60-40 mix between avoidance and removals. So historically, the removals quotient was much, much smaller. So that's increased pretty significantly. I think we're on par towards achieving 50-50 by next year in terms of where the demand is. The demand is obvious on the removal side, but there's still an underlying commitment towards high quality avoidance credits. And then there are obviously buyers that are price sensitive that are buying up stock that is essentially a distressed asset in the market. And there's a lot of willing sellers on that side. So you see a depression in prices on that end of the market, and then a steep increase in prices subject to the supply demand dynamics. Very low supply of high quality removals and a lot more obvious demand, and hence prices
are
fairly
removals,
stable.
you're talking more nature-based
Talking about
solutions,
nature-based, we transacted also some credits of Carbon Cure's project, which is a cement project, a sequestering carbon. There's demand for broader CDR as well.
Yeah.
That market has actually been really resilient, but supported by a very small contingent of corporate buyers, primarily in a primary market. It's used upon there. Yeah.
See, this is where I'm fascinated. This is where I'm more interested to go into now.
Yeah, sure.
Is stuff that is where it's almost like a private equity kind of like spreadsheet that you can plot with a lot of the removal things. So and the returns are not there for some folks. Yeah, they're yet, but they're getting there. And so what I'm fascinated
they're also big tickets.
Yeah,
and they're underwritten
exactly
by
it.
infrastructure. So from a PE perspective, you can actually, they're bankable because there's actually an
100%.
underlying asset there. There's pipes and there's
they're
sort of
bankable by
engineering.
what we'd both recognize as project finance, as opposed to risk capital, to use the European term.
And so but can we unpack that? Because that's a really interesting point. As an investor, you're looking at things through this investability lens. Are these projects bankable? Like you're used to, and I presume, right? And I'd love for you to unpack it, investing in projects and then having access to capital markets through debt financing and later potentially equity. But equity is a very expensive form of capital, right?
It's the most expensive form.
So do you want to kind of unpack that bit? And the difference between, like you said, infrastructure?
So I think it's important because I imagine there's probably project developers that are watching this going, what's the next phase?
What's the next phase?
Where do we go to? And so we looked at, just to step back a second, we looked at a whole bunch of different projects. We looked at nature-based solutions, as we mentioned, with soil sequestration projects in Australia. Our learning over time was that soil sequestration was a fairly new science. Lot of issues. You can point a satellite at it and make assumptions. Then you can go and drill a few holes 10 meters apart and discover that the world changes in 10 meters. All right, and it changes a lot in 100 meters, and then you might end up with 12 different ecosystems on one farm.
Wow, interesting.
So that was one of the learnings that we found, is that on a Captain Obvious sort of level, it was like, this looks great. But as you drill down, literally, into the soil, you discover that these things are much more complex to measure, report, and verify. Which, of course, are the three key things for soil sequestration.
Just for all carbon in general.
All carbon in general. So what that tends to push you towards are things that, and then we looked at Cookstove projects, which on the surface, how wonderful. You're going into a place, you're providing people with an alternate method of cooking that's going to allow the people in the household not to walk 7 kilometers a day to go find firewood.
So the efficiency is important, but also the particulates. If you've ever been 100%. Into a house where they're actually cooking on just an open type of fire, the particulates, the smoke, the soot is in there, and you can see the walls coated
it's awful.
black.
Lung
you've got
disease,
children and women who are cooking 100%. Typically, and they're affected by these pulmonary issues.
Again, you look at these Cookstove projects and you think, how wonderful. We're changing people's lives. We're making the lives of everyone in that household better. We're giving them a more improved, more efficient method of cooking. They're not having to walk kilometers every day to go and find firewood and whatnot to fill
You're
this stuff
decreasing
up.
the pressure on the biome, etc.
Brilliant. So you read the project development document, you go, this is project design document, you go, this is fantastic. What an amazing thing. Then you actually drill down and you start to learn, and you find out that Mrs. Smith, when she gets her Cookstove, maybe continues to use the old Cookstove, but it's logged as a Cookstove in current use.
And there's an assumption that's an over-assumption.
Maybe the forests end up filled with dead wood and they burn easier. Maybe the thinking around like the carbon credits itself and how they're attached to the actual cooking process was flawed. And so the more you drill down into these things, the more difficult it becomes to assume a straight line or a correlation that's a linear correlation between the amount of Cookstoves you distribute and the output.
Just interestingly, there are some new technologies that are being leveraged, like Internet of Things, sensors, and other things that are being applied to Cookstoves
and that's
that
awesome.
hope to alleviate some of those question marks. But it's not, Cookstoves aren't just fraught with just that uncertainty and the counterfactual issue.
Well,
there's also a fraud issue that's also affected the market and shaken the confidence to its core.
And the
basically.
fraud issue, that can happen at all levels. But I think what you just mentioned about the sensors that can be more centrally controlled is a fabulous development. Because in my experience, it doesn't matter how small the village you walk into, there's a smartphone in there somewhere. There's someone can be given that.
And now coming back to your space analogy, now there's Starlink, and essentially you can open 100%. Up access to the internet to anywhere in the world.
I agree that the sensors are going to do a lot to help that business, but I think the most successful Cookstove project that I've ever seen is probably Cocoa Networks in Kenya. I think that is an absolutely...
Cocoa.
Sorry?
Lead in the team.
Look, 100% shout out, because what they've done is create a commercially wonderful business. It's like Zipline in Rwanda. It's this business that you would have thought was science fiction a few years ago, but now you're using, with Cocoa Networks, you're using bioethanol to do a very efficient job of getting rid of the particulate that you mentioned.
Yep,
That's
much
happening
cleaner
in
burning
months.
fuel.
It's
Yep.
cleaner burning fuel. You're buying this at a kiosk. You're walking home with something that's the size of a milk carton.
Yep.
You know, not a bag of charcoal briquettes.
Yep.
This is wonderful technology.
Yeah, and it's much more measurable.
Much more measurable. That's a project I think any investor can get behind. That's
Absolutely.
a fantastic project, and that's a project that is venture backable in the beginning because you can see where they're going, and now private equity backable in the expansion stage. There's no reason why that project should not be expanded to every country that was previously being thought of for Cookstoves. Wonderful, wonderful concept.
Yeah.
And that's something, so you go through this whole process of like looking at all these sort of clay cookstoves and replacement metal cookstoves and all the rest of it. And that's where you end up. You end up with something that is a very portable device that's powered by bioethanol, which is essentially a sugar byproduct. A lot of the countries we're talking about here are also major sugar producers.
Yeah.
Fantastic
they've got
combination.
yeah.
So I love that as a project. So moving on from soil sequestration to Cookstoves, and then you go to mangroves, and you say how wonderful, we're replanting all these mangrove plantations, and some people are doing a fantastic job. Rich Gilmore is a good buddy of both of ours and an outspoken person within our industry, fantastic guy. And what they're doing is remarkable. But one of the problems with mangroves that you start to realize is that in areas that are very polluted, you have the problem where the mangrove senses the amount of pollution, which is typically from fertilizer.
It's a nutrient rich.
Yeah, it's a nutrient rich environment. So instead of putting their roots down 3 feet, they put it down 12 inches. Right? Hurricane comes along and wipes them all away. So these are core problems within that business that you don't know about until you start drilling down into and talking with people on Bintan Island, in the mangroves. And you say, what could go wrong with this project? And they tell you, and you go, oh, fascinating. I didn't learn that across the desk reading any of the documents I read in Singapore.
So there's a huge discovery journey
100%.
that you've just described. But it's coming back to
we've all been on this.
No,
Everyone in the carbon industry.
But it's great that you're talking about it because it's not just black and white in terms of on the paper.
And this stuff is rarely in. The stuff that you mentioned about the quality of health of people is always in the project design documents. It's always there in great detail.
Yeah.
The problems with how you're going to go in and measure this stuff, do the distribution. We did one project. We looked at one project in Bangladesh where the cost of the project, 75% of the cost of the projects were teams and trucks.
Really?
Distributing for Cookstoves. It was a massive, massive cost, was just getting this stuff out into the field.
I'm surprised that there wasn't a higher quotient for the DMRV piece.
That was also
that's a red flag.
That's also the teams and the trucks.
Oh,
right?
that's the teams and the trucks. Okay.
Yeah, when they're going out and doing the DMRV,
they're actually there on
digital measurement, reporting, verification. They're in a truck. They're going to visit this remote village. If you've ever seen the Top Gear episode on Madagascar, you know what they're dealing with. When they're going out in these trucks, it's taking them a day to go. They go to go 20 kilometers sometimes. So the logistics involved are another aspect that you learn about and go, wow, I'm thinking too much about paved roads and bridges here. I need to think a lot more about bicycles and tiny little lanes in terms of how you get to these places.
So all of these problems are being discovered throughout your experience as an investor.
Yeah.
So ultimately the timing and then obviously the broader complexity. What did that result
all
of
this
your
is happening
investment
at
thesis?
once, by the way.
Yeah, everything happened at once.
Yeah.
So in terms of deterrence and in terms of performance of your fund, complete the story for me.
So our investors had the right to veto any projects that we put in front of them. We had the right to draw down.
And these are institutional investors,
big
family
institutional
offices.
investors. And so we raised this money. We put close to 30 projects together for consideration of all of the types that we just mentioned: mangrove, cookstoves, soil sequestration. And we weren't able to get any of them away because all of this happened literally in the months after. So the market dampened, to use a nice word. And so that was the first problem. But then as we started drilling in, we started finding our own issues. So the problem was the market went from an assumed 25% IRR, let's just draw a line, to maybe high single digits overnight just because of the change in pricing. So then what happened was, those things that we would discover individually about the plans removed the ability to create that even positive IRR. So now we've got nothing to invest in. at that point.
So you're
Because
catching a falling knife.
you are, because essentially in the previous period, say in the 2021, 2022 golden period,
Yeah, when the market was
when
just
the market was
cresting.
just flying,
Yeah.
you could forgive a few percentage points of problems that we talked about with fraud or, bad reporting or whatever. You could probably say, look, there's some contingency I need to put into the project plan here. And we all did that. But then when that becomes the only money that you can potentially, when that becomes necessary for the returns, now you're facing a different problem. So it's at that time, my reaction to that was, okay, I'm now solidly of the belief that we need to do something. As everyone who touches carbon and decarbonisation, you do start to read a lot of the literature, and you do understand climate change is real. You do understand all these things, and you do understand that carbon dioxide and methane in particular, these are big problems that need to be dealt with. So then you go start looking at things like direct carbon capture, and you discover there's only 40 metric tons a year being, pulled down.
It's a little bit more, but it's a fairly small volume.
It's pretty small.
It's a pretty small volume.
Yeah.
And also there's a concentration. Like, quite frankly, Microsoft owns 80% of the DAC market, and it's a primary market transaction. So it's not really a market. They're making a market.
I think
but it's great that they're doing that.
It's great that they're doing it, but I think and also just a shout out to the energy companies. I think they're funding 15 of the top 20 of these direct carbon capture projects. They all have their name on them. So for people that don't think energy companies are doing anything, well, they're the only reason direct carbon capture with Microsoft and a couple of others exists. So big tech, big energy.
Big tech's essentially underwriting that.
Correct. And so shout out to those guys for actually doing something.
Yeah.
So we looked at that and we couldn't figure out, we weren't comfortable with making an investment there because it
probably
seemed
too early, I think.
Well, we just didn't see the returns were there. And the other thing that we started looking at, so we started looking at things like concrete manufacturing, coal, like again.
What about steel?
Steel. Love green steel. So we have a fund that we're setting up, or we're helping set up. That's one of the things that Hatcher does, is we help people set up funds.
So this is kind of a bit of a pivot. So the fund you raise at a pretty inopportune time. The market started coming down precipitously.
Well, funnily, it wasn't a pivot for Hatcher, because Hatcher is always in the business of setting up funds. And helping, connect people with capital and what we do.
Yep.
And so we were still in that business of setting up funds for people and plugging in service providers. And the service providers were plugging in admins, placement agents, managers, experts, that could help, sustainability experts, ESG experts. These are people that we could plug into funds as Hatcher. And so when we started going back to that core group of resources, we said, what can we do next? And so one of the things we're doing now is we're setting up Grünerstahl, which is a green steel. For any people who speak German on the well, they've already got that message. So we're setting
very
up
eloquent pronunciation.
Yeah, exactly. Thank you. So we're setting up a Grünerstahl in ADGM, and that'll be a project that is basically designed around green steel, and that'll be up and running in January 1. And I suspect that the kind of investors that will come into that will be institutional investors, because that's a debt-based fund, right? By the way, disclaimer: I'm not selling it right now. I'm just stating factually, what we're doing with that. Now, the reason that I think investing in green coal and green steel and green cement makes Larry Fink, by the way, is a huge fan of those three investment targets. The reason I think this makes sense from an investment perspective is you can plot this stuff. You can do a private equity model on this that'll that'll come back within very, very very narrow range of what the expectations are. So the output of this stuff is very measurable. Getting back to the DMERV stuff we were talking about earlier. But also you can fund this stuff with debt, which opens it up to an entirely different market of investors.
And also scale
as well. So I think with green steel, with green coal, with green cement, you can go to investors and you can say, I need $1 billion, and you can put that away. You can get that into projects, a bit like nature-based solutions. I mean, our view was in Australia there was easily $1 million worth of agricultural projects that could have been funded. And still could be funded. The difference, I think, in where we are today versus where we were back then is I tend to, just as a private investor myself, I tend to sort of gravitate more towards the stuff that has a very projectable range of outcomes from an investment standpoint. I really like being able to look at these spreadsheets and go, okay, I know where this stuff is heading.
Yeah.
It's not entirely based on carbon credit revenue alone. And so if you look at something like
which reduces the volatility.
Well, the
your
typical
estimates,
green
right?
steel project, talking about the project, not the fund, the typical green steel project, you're generating revenue. 10% of that's coming from the resale of the steel that gets created out of this slag pile that you're removing from the outskirts of this town that's been suffering for that. Talk about ecological damage. So taking all of that green steel, all that steel waste, and then creating green steel from 10% of it, fertilizer and cement from the remaining 90% of that, also using the entirety of this waste in products that would otherwise use new resources. So this is a fantastic use of stuff that's effectively just sitting, ringing a small town in Romania or Serbia or Saudi Arabia or somewhere else. You can go and clean up all of that waste, and you can create a profitable hundreds of dollars per ton steel outlet, tens of dollars for the rest of it.
What are the energy inputs to make it a green steel?
The energy inputs are not much. Like, they've automated the plants for this thing.
From what sources?
Oh, typically they'll set this up next to the steel mill in the town. It'll just be an adjunct thing that's run by literally a handful of people. And the whole process of this is pretty much automated. Now, green coal.
But what makes it green?
What makes it green is
ignorance.
what makes it green is essentially you're using this waste material to create concrete and to create fertilizer. So you're no longer using new resources. You're not mining. It's it's totally recycled.
Interesting.
Everything that you're doing there, from the green steel that you're creating to the greener concrete to the greener fertilizer, is based on recycled materials that would otherwise just be polluting.
Interesting. Okay. Cool. And then green cement?
But just by the way,
green coal,
the bulk of the revenue there for the investors is coming from the actual materials being created. And the carbon credits then become part of the revenue stream as opposed to the whole revenue stream.
Interesting. So these projects can also generate carbon credits?
They can. So if you're looking at something like Tesla, I think Tesla's carbon credits, which were $1.79 billion last year.
On the balance sheet,
Yeah, that's 3% of their revenue.
Yeah.
Right? So it's a very small part of their revenue, but it's a nice piece. That adds significantly to Tesla's profit.
Of course.
So this is the same kind of idea, that you have a really solid revenue stream, and then you add the carbon credits on top to help. First of all, it's a great thing to have these green projects or products coming on market. You add the carbon credits on top to enhance the profitability of the project.
Are those projects already registered, or is this all early stage?
They are already registered, and they'll come in under the fund once the fund is up and running in January, February.
Cool. I'd like to touch base again once that's kind of live to kind of figure out the logistics and the specifics about these credits.
You probably have to talk to the fund manager, because then they'll be selling securities. But it's
sure.
But I find all projects of this type to be highly relevant to what you and I were talking about before we sat down, which is how the industry needs to pivot to get in behind other kinds of projects. Given the size,
decarbonization.
Given the size of the voluntary market, we're just talking about the fact that Tesla's carbon credits are roughly equivalent to the size of the voluntary market, as reported. I know you've got your own view on it.
Yeah, look, I think that number's underreported. I think that the source of the data from that source, and it, not pointing, casting aspersions to the ecosystem marketplace folks. I think they do a great job, but it's a survey, and so they have voluntary respondents coming in and providing, quite frankly, a very transparent log of all of their trades. The big institutional traders and the big commodity houses are missing from those reports.
Yes.
Obviously, they don't want to disclose and talk of their books. So it's an underrepresentation. I've challenged the exchanges to provide, and the registries to provide, some level of demonstration.
What's their reaction been?
Well, it's proprietary data, but I think that over time that they should start disclosing what is the churn rate, at least. How much was issued is obvious, how much was retired was obvious, but the story in the middle, the life cycle of the credit, how many times that was traded, is a little bit opaque.
So, without stepping on any of your previous confidentiality agreements, which I'm sure are still in place, can you provide an estimate, you think, of the voluntary markets? So it's not $2 billion. What is it?
I'll go off the top of my head here, but on the carbon dioxide removal side, that market's at least $3 billion, if not more, for just 2024.
Right.
So just because the notional value of those carbon credits are really much more significant.
Potentially undercounted by two to three.
But that's just on the CDR side, and that a lot of those are forward agreements, but they're deals that were struck in 2024. So it's not obvious exactly how much will be delivered this year, but it'll be a large quotient nonetheless, just because it's a big ticket size. On the traditional VCM, I think it's underreported, and I think it's probably going to be double the size of what's estimated. Is my estimate.
Okay.
And I think, anecdotally, we haven't closed out Q4, but Q4 of 24 is looking pretty robust in terms of retirement numbers and in terms of the broader participation. So I do think we'll see an uptick certainly from 2023.
So I know you.
So
have...
let's say $2.5 billion is where I think the money's on.
Okay, so you've been in this business.
For voluntary, and then we add on CDR to whatever that might be. Maybe it's a $3 billion market again, which is what the estimate was at the apex. But again, that was underreported. So I think nonetheless we're further off what the high watermark of 21.
So it's getting off voluntary, but compared. So the cap and trade.
Compared to cap and trade markets, it's at 2 orders of magnitude less, right? Or at least 2 orders.
Yeah, exactly.
It's like
orders of magnitude.
Yeah, it's an order of magnitude, two orders of magnitude, because you've got the EU ETS sitting roughly $800 to $1 trillion in size. That's a very, very large.
And then
market.
You've got essentially a copy of that in China that's nowhere near as much in size.
But it's got a huge potential in terms of potential growth. You've got an emergence of different taxation and trading systems. And now with implementation following Paris, we start to see more of that effectively distribution of these pricing signals throughout different economies.
Well, in Singapore, right?
Singapore, we have a carbon tax, and that's ratcheting up. Yeah, you've got, I was just actually in South Africa just recently. I wasn't in South Korea earlier this year though. South Africa got the COAS, and that now just given a view in terms of the step up with regards to pricing there all the way through the 2030s, and you got a price of north of $25.
And we've got ACCUs in Australia that still continue to do well.
Yeah, and you've got active markets in California and in Reggie, and so these big compliance markets are much more intrinsic and sticky because of the compliance mandate. Corsia, for example, is a market that is currently being implemented. We don't have any numbers yet in terms of transactions or issued volumes just yet, but indications are that my old team at Expansive have been holding auctions for the Ghanaian credits. No, not Ghanaian. Guyana credits.
Right.
Apologies. From Art Trees, and by all accounts that auction is going well and being well received from the airlines that are respondents to the aviation carbon exchange. So look, market signals are positive, but overall story is still not, I don't think, in that position that it makes it attractive for investors like yourself to re-engage.
Now you were just in Baku for a
I was there for 1 day.
1 day.
Yeah, it was
By the way, what a cracking town. For anyone watching this, if you've not been to Baku,
Baku is a revelation.
It's like Singapore of Central Asia. I absolutely.
It was like a combination between Istanbul and Paris, with more grandiose avenues.
Big fans.
Yeah, well, there's a lot of oil money there, so clearly.
Like I just love the place. I mean, I was there for a space conference last year, and I just thought it was. So I didn't get to go to COP last year. I went last year in Dubai. But yeah, I love Baku. I thought it was absolutely astonishing city.
Baku was an interesting place. I was only there for a very short period of time. There for a client's event, but very, very happy with what the outcomes are.
And so you think this cross-border, now that we have some clarity around that, do you think that's going to make a difference?
I think so. I think now that the rules are finalized and now we're actually facing implementation, I think that's accretive to a broader rebound to the market.
Excellent.
But the devil's in the detail. I think we need some time to digest and see the implementation piece take hold. But yeah, certainly having the centralized control at the 6.4 level is pretty good.
And to be clear, ETS, so the European cap and trade, I can't trade credits into the ETS from outside, right?
That's correct.
I think in the current phase.
Current phase.
Yeah. So I think this is something that's not understood or well understood by a lot of folks. Mm-hmm. But what and I know you've been doing it since 2008, so you've seen the ETS and it's go through various cycles
of
but
it wasn't as robust as it is right now.
No, 100%.
The first few phases.
But I think for someone who's only been in the carbon markets for 2-3 years, like I do tend to look at that and go, wow, 47% emission reduction since 2005. This is incredible.
But that's the whole point of pricing
amazing,
and externality.
Right? Yeah,
it's actually changed behavior.
It's a true carbon tax, and because it's implemented by the government, and because it's directed directly at the emitters, I think it's been quite successful.
It's been very successful.
Yeah.
Yeah, and look, a lot of lessons. It's provided a lot of lessons to other systems. You mentioned the Chinese ETS. I was part of many engagements with IETA, and obviously they did thousands more with various different Chinese delegations who came to learn from various different European policymakers and obviously compliant entities in terms of the lessons from that system. So it's been transformational. I think now it's the time to really get things, going. So the next 5 years, really, as we approach 2030, we need more and more and more of that stimulus with regards to compliance markets. But there's always going to be an opportunity for voluntary markets. At least that's my thesis.
Oh, I completely agree with you.
There can always be more action.
So I find the ETS fascinating. I find what's happening in China fascinating. But I do have a question for you.
Sure, man.
When does the US adopt a federal ETS in the US? Do you think it's going to happen?
No. It hasn't happened for the last 20 years. I don't think under a Trump administration that's even anywhere remotely within consideration.
I have a different view.
Really? I'd love to unpack that.
Yeah.
Tell us.
So I think outwardly Trump is drill.
Yeah.
And very focused on obviously he's a friend of the energy industry, and he's Republican, and all those things are sort of givens, right? But I also, two things about Trump that I do actually like. He's an authentic guy. He's kind of, what you see is what you get, and he's very pragmatic. He comes from a business background.
Sure.
I think that there is so much activity going on in the area of sustainability, carbon capture, and everything related to the stuff that we just talked about with the ETS, that I believe that the US will creatively come up with a solution that works for all of the broader objectives.
If it aligns with his tariff policies, then I think that maybe you're right.
See, I think that could be critical, right? If you were to go to the direction of, say, a green tariff, if you put a tariff on countries that were the bigger polluters, the bigger emitters, what better reason to have a tariff? What better supported reason would you have for a tariff?
Yeah.
Than to go and create a tariff around.
As opposed to a trade deficit justification.
Correct. Well,
so European Union has effectively got that with the cross-border adjustment mechanism, exactly. The CBAM. So I think you're right in that side, because I think there's as the CBAM now starts to take hold and importing countries have to pay that price at the border effectively, that sends that signal through to the sources of the emissions effectively. So now the US will start to feel some of that, and they'll start to retaliate. That's essentially
so if you're Trump and you're looking at this carbon industry, you can add another tool to your toolbox.
Okay.
Effectively, you can add another reason to put tariffs on things that you didn't have before, and it's a reason that will be supported by the left, to be supported by people who are looking for some action to take place, to be supported by the energy companies. Because a lot of the U.S. energies would certainly applaud. U.S. energy companies would applaud that. Everyone else would get on board. That if it operated like Europe, no harm, no foul. I think people would say this is actually something that's workable.
Look, I'm hopeful that that's the case, but I think I will
reserve
my exactly to wait and see. I've hoped for many a policy direction in the United States since the Obama administration.
They've got to do something. I mean, 89% of the world's solar panels are now produced in China. There has to be a shift here towards, and yet renewable energy is fast becoming the cheapest source of energy there is. Yep. So there's got to be a source of that manufacturing back to the US as well.
The stuff that came through under the Biden administration with the Inflation Reduction Act, the IRA, actually simulated big parts of red states in the United States.
Yeah.
And there's now reticence for a lot of those governors to unwind some of those policies because they're actually creating jobs and industry. And so from that perspective, I think the whole horse is bolted. I think unwinding that level of support and stimulus from a policy perspective is going to be very difficult.
But you look at someone like Arizona. I mean, this is a Republican, state for all intents and purposes, certainly at the state level. Yeah, they've done some amazing work in renewables. Yeah, well, and I think that's true, as you say, of many of the red states. So,
well, Texas is an energy state, and that's been obvious for the last 15 years, where they 100%. Just said, look, energy is our export, whether it's oil or gas or solar or wind. Hey, we happen to live on this wind corridor, let's go.
So you're touching on something here that I don't think gets enough press, and that is that energy companies will move to the cheapest form of energy.
Well, they also move where there's money to be made. Like it's a
And they'll
commercial
leverage
imperative.
their distribution networks.
Yeah.
That are basically the hardest thing for any new company to create.
That's exactly right.
And so if you suddenly move to distributing hydrogen instead of gas or petrol, as we call it in Australia, if you move to distributing that hydrogen instead of that, do you care? It's the same distribution network. You're probably making as much, if not more, money eventually.
It's all driven by commercial imperatives.
100%.
There's no ideological viewpoint there. It's just a pure and shrewd capitalistic model with regards to energy companies. But we deviate. Can we come back to you?
Yeah, sure.
Because it's been a pretty great conversation in terms of like the deviation. But so
all this factors into, I think where we get to, and at the end of this conversation or this part of the conversation is everything you learn when you come into the carbon business. You come in thinking it's one thing. It ends up being another thing. You end up saying, what can I take from here and here and here? How can I make lemonade, out of what I'm like?
What are you given?
What I'm being given here.
Question for you is, given your extensive background, let's say in technology, right? You talked about the antivirus business.
Yeah.
Whether it's software or hardware, I mean, aren't some of those lessons also there in terms of like the evolution and the process? Because it seems it's iterative, right? It's just human nature, and in terms of innovation nature, that we innovate, then we discover maybe that's not the right approach, and then you kind of come back to this way, and then you kind of deviate.
So glad you asked me that question.
Right?
So we've just made, we've invested in close to 400 companies now out of our H2 fund. Right now, some of those are climate tech companies, right? I think there's probably maybe 10 or 20 companies there you broadly say are climate tech companies. So some of those are measurement, reporting, verification companies. Some of them are like reporting on how well companies are doing. As a company we invested in that's a cracking company, a fantastic company out of Hong Kong called Blue Onion. For example, they're doing a great job of looking at how sustainable public companies are and graphing all that information.
Great.
Wonderful company. So a lot of these guys are working in software. But the lessons, what you just talked about is something that people don't really talk about enough, and that is if you're a hardware-based startup, 10% of venture guys are going to invest in you, just by definition, because the other 90% will be focused on more soft stuff, right? So already you're facing a pool that's 90%
diminished
less
pool
investors.
of investors,
So it's shrunk, right? Now, if you're working on a deep tech version of something, so if you're working in semiconductors, you're working in true AI, you're working in something that requires like carbon capture, that requires just a lot of thinking and whatnot to get right, you're further narrowing the pool of people who have that kind of patient capital.
and at size.
Oh, it's size.
Because it's very expensive to
Look at
actually
the
invest in
pharmaceutical
that.
industry. It's completely different than software. If you're a founder in that business, you'll end up with like 5 or 8% of equity after your Series A. Why? Because you had to raise $100 million to get to clinical trials. So it's a completely upended cap table, completely different story the type of company you're investing in. So if you're in climate tech, you're possibly in hardware, you're possibly in deep tech, so need 2 different pools of capital that are not easy to access, and you're possibly dealing with the kind of economic model, carbon credits, as one example, where you don't quite know the value of your unit economics going into the deal.
I think that's a big component.
Huge component,
big emphasis on that.
So now this is why, getting back to the Green Steel project just briefly, the reason I like these projects is because 80-90% of the economics are known, right? They're known, but that 10% of the economics is probably in that flexible area. I can deal with that. Anyone can do a very viable model around that. But for the pure carbon tech startups, what they have is a slightly different problem in that they're dealing with maybe hardware, maybe deep tech, and maybe a non-fixed economic model where the unit economics can't be known 10 years in advance.
So that makes it very difficult for them to access capital markets.
But if you crack that, you can make a mountain of money. There's no 2 ways about it, because I think McKinsey's saying that fixing the carbon crisis by 2050 will be a $9 trillion a year cost. Like there's other people that have been much more conservative on those estimates. They're still in the trillion.
I think it's definitely in the trillions.
So as a climate tech startup, you're looking at that for your hardware and your deep tech, and you have a non-fixed unit economic model. But boy, you're looking at trillions of dollars potentially as your revenue model if you manage to fix this.
And so as a founder, I listen to that and say, okay, we're staring into the abyss. The difficulties are insurmountable, and you got to go this way. But there's a huge opportunity. How could you not be excited by the challenge?
You've got to be excited by that. And by the way,
and most founders are clearly delusional, and they have this drive that's insatiable.
BYD in '96, Tesla in 2005, SpaceX in 2000. All these guys were staring into the abyss.
Yeah,
they were staring into an absolute black hole where their business plan was, because
and they just kept going.
They just kept going. And now you look at those businesses and you go, oh my God,
that was a no-brainer.
They're so incredible. They're such incredibly commercially successful. And valuation-wise successful
because of the laws of attrition. They stood their ground and they continued.
They had the balls to continue.
And they had the balls to continue.
They had the balls to continue and the resources to continue.
Yeah, that's
getting back to the backers.
Back to the backers
and the investors. The investors got in behind them, realized that this wasn't going to be a black hole forever. Realized there were $1 trillion. Tesla's now $1 trillion company. So they saw through the black hole to the other side and went, there's got to be trillions the other side of this story. And they were right. And that you could say the same thing about climate tech companies now. There are trillions sitting the other side of the story. So who is going to solve this massive multi-trillion-dollar problem?
Okay. So I love that, because now it's a sense of optimism, and I'm deeply an optimist, as you know full well. I know you are. I know as an investor you have to be.
You have to be,
and you have to be infected by the virus of many of the founders 100%. That you back. And full disclosure, you've backed one of my new ventures.
100%.
So thank you very much for coming in on that seed round, and we'll have more to come on that in the future. But can I now pick up a thread that you've kind of woven into your story into this tapestry, and you've alluded to some of the folks that have been successful in that space, in particular SpaceX. But your space background and experience, you talked about you worked in space for a while, and then you thought that maybe the innovation wasn't there. Give us a little bit of background about what you did there, and then some of the very interesting things that you're doing right now as you've come back to space. So now we're going. We've talked about within the world. We got down to the granularity of 12 inches. I think you said mangrove roots. If the system has way too much nutrients, etc. Now let's zoom back out and let's go outside.
Let's go into space.
Yeah, let's.
So I'm one of the kids that had space wallpaper.
Yeah, cool.
Right on their bedroom. Yeah, literally like planets, Saturn, all the planets. And I
remember having those glow in the dark stickers, Saturn and space, all on my roof. Then peeling it off when we moved houses wasn't much fun.
Exactly. So I grew up with a fascination with space as a kid.
Yeah, cool.
Obviously you want to be an astronaut, and then you go, well, wait a minute. Australia, not much of a space program. And so, but always had that fascination with space. So when I got a chance to work in space in the satellite industry, I was thrilled to do that. And so I told you about my music television channel. That was a bunch of fun. And then the one I did after that was I was the CEO of World Space Asia. And our job here was to basically launch a satellite that provided services that are not unlike Starlink. And this is 1994 or 5. We're launching this stuff. But this is 64 kilobit per second.
Yeah, with the dial-up modems at the time.
Exactly, like that kind of stuff. But at the time, this was amazing. It was the most visionary thing I think I've been associated with. The company raised like $1.8 billion in its seed round. It was a phenomenal company. Had the backing of our European Space Agency, Alcatel, Ariane Space. Just a terrific company to work at, and super visionary company. And so the idea there was, so my job there was to distribute essentially little radio terminals, mainly to India. That was our big market. And we deliver digital radio, digital BBC, digital jazz, digital, like 150 channels.
Wow.
And there's still people that if you talk over my age in India, they'll go, oh, I remember I had my first world space radio, and they get super excited.
Yeah,
because it was the first time they weren't listening to the BBC on shortwave. Or they were able to connect to the internet. So this is revolutionary at the time. It was a super fun project. And then I did a couple of things after that. And then, as I mentioned, I left because I just really didn't see that there's going to be a whole lot of innovation there, how wrong I was. Thank you, Elon. Anyone who doesn't tear up watching that recovery of the Starship.
Yeah, that was a monumental moment.
Remarkable,
history,
remarkably emotional moment, I think, for all of us. So did that for a long time. And then about 2 years ago, I was approached by a couple of guys out of Germany, and they had a project that they were looking to work on that was basically a giant sunshield project. And we've all read about this stuff in Scientific American, various other things. And Yeah, so the concept's been around for a while.
Mm-hmm.
And so when I first heard about it, I was kind of dismissive of it because, there's a lot that needed to be done.
Yeah.
To be effective, this thing has to be enormous.
So explain the fundamental kind of physics.
The fundamental idea is that you put a spacecraft, because everything in space is some form of a spacecraft. You put a device or a series of devices at the L1 point, which is the point at which the sun's gravity matches the Earth's gravity, for simple explanation. Okay. The L2 point, by the way, is where the James Webb telescope sits. So it sits the other side of the Earth in permanent shade. This would sit in permanent sunshine and just travel around with us as the year passes. It would just sit in the same location and travel around. And if it's big enough, it can reduce the amount of energy.
So this is an array.
It's an array.
So you think like a ginormous umbrella.
Correct. And it basically, so conceptually, all of the concepts are the same. If you reduce the amount of sun's energy coming to the Earth by a small amount, you can stabilize the temperature at a certain level and allow for all the other things that we talked about earlier in the conversation. Soil sequestration, carbon capture, reduced emissions, everything that's happening in Europe. So if we had 20 years, we know that we can get there, right? 20, 25 years, that's what most sensible people think it's going to take to stabilize things the way that we're currently working at it. What this project does, it's called EarthGuard, is it helps us stabilize that stuff maybe 10 or 15 years earlier than that point, which prevents massive agricultural shifts, massive population shifts, all the stuff that is well talked about and well known. Mm-hmm. So if it's possible...
This can be controlled in terms of turning on and off, correct?
The secret, the reason that I got attracted to the EarthGuard project is it's fully reversible. If we don't need it anymore, you just turn it off. You put this thing on its side and it just drifts off into space, doesn't harm anyone. Mm-hmm. It's 1 million miles from Earth. There's no way it can harm Earth. And if it came back here, it would just burn up in the atmosphere. It's a fully reversible first principles approach. And what it does, obviously it's not something that we need to have for longer than we need to have it. But because I think you and I both agree that everything we're seeing now is eventually going to work and we're eventually going to stabilize the solution. Mm-hmm. What we need is something in the interim to help us get there. And so this thing can help us get there. And by the way, I mentioned I was initially dismissive. Some of the scientists that we have working on this project are incredible. The validation that we've received from a number of people whose background involves super senior positions at NASA is incredible. So we've now had involvement from climatologists, matter experts, advanced materials experts, space experts, people working at virtually all the commercial space industries that have been in touch with us or met us at IAC recently in Milan.
Yep.
We've had validation now from so many sources that the approach that we're doing is commercially and technically viable. It can be done. Is it a massive project? Absolutely. Is going to the moon and living there a massive project? Of course. These are all massive projects that sound like science fiction, or everything's science fiction until it's not.
Yeah, until it becomes reality.
So, SpaceX was science fiction 20, 25 years ago. Tesla was science fiction. If there's one thing that Musk does incredibly well, it's turn science fiction into science,
reality,
into commercial fact. Into a commercially viable, wonderful business. And so what I've been convinced of over the last 2 years of talking with all these experts and in the process of assembling this team, which I've personally invested in, is we have a fully viable project that can potentially save the world during this interim period that is going to take us to fully transition to a point where renewables are providing a decent amount of our energy, where the temperatures have been stabilized, where they continue with efforts in Europe and hopefully the US and other places in the world, and by the energy companies. I see what the energy companies is doing is they're in a transitionary phase right now. I was recently at the Saudi Aramco event in Dammam, and I thought what they were putting forward in terms of the scale of their projects, what Qatar is doing in the scale of their projects, what the UAE is doing, these guys aren't messing around. They're committing billions and billions of dollars to transforming their businesses. And I think this is absolutely amazing.
But this just provides an insurance blanket, literally and figuratively, for the world to effectively get our act together.
Correct.
I think it's fairly obvious to me, obviously being a witness to a lot of the negotiations at the UN level with regards to the UNFCCC, that it's moved at a glacial pace. Back when glaciers didn't really move that quickly.
Yes.
But
Good analogy.
Yeah, great analogy. It's always shifting. But essentially, it's taken 10 years to get the Paris Agreement from signature to now implementation.
Well, I remember Rich Gilmore
time.
at the climate conference we're at in Singapore last year put a number across when he was in his keynote where he said that the target was 150 billion tons of sequestration by 2030, and I think it had been 2 or 3 or something. What we'd successfely managed to do. So, look, clearly
it buys us time. So this is a pretty
out of this world
opportunity.
So 2 things. We're at a crisis point.
Yep.
There is a ton of good work being done that we talked about earlier. There's hundreds of projects around the world that will eventually either sequester carbon or schemes that will create a reduction in emissions, but we need time. A lot of these things, like if you're growing trees, one of my first jobs out of high school as a lumberjack, I've worked in forests. I've worked for the Victorian Forest Commission. I've been in that environment, literally, day in, day out. Trees need time to grow. Plants need time to grow. They have their own problems. They create more methane. Through the more forests you have, the more forests that rot, the more methane that gets produced. There's other problems, going back to the scale of things here. We need time to figure all this stuff out. This project that I'm now a part of gives us 25 years to figure that out. And I'd stress this is my hobby project. Hatcher is my main project, but Hatcher's doing its own thing by helping funds like Greener Style and Carbonation and whatnot get up and running.
How many funds are currently within Hatcher?
On the platform, there's about 60, and where we have a direct commercial involvement in them, I think it's about 12.
That's incredible. Okay, cool. And then back to the EarthGuard, just for context, this array is pretty large in terms of its ambition. Give me some context in terms of how many satellites have to go into orbit, and then what does that represent?
There's no satellites as such. Well, everything
spaceships.
Everything has an orbital relationship with the Earth is by nature a satellite, right?
Yeah.
So this is essentially 3 to 4 times the distance further than the moon. The moon's a satellite, the original one, and so this is a satellite. But essentially, what we have to do is launch a bunch of rockets, which we must recognize has its own effect on emissions and whatnot, negative effect, but we can counter that pretty quickly with what we're doing. So then we put up these shields up there, and we have to put up enough of them for that to have an effect that will keep us stabilized at hopefully 1.5, 2 degrees above post-industrial levels. That's really the goal.
That's the goal. And so in terms of the ambition, how many spacecrafts have to go into orbit? Out of orbit, L1.
The interesting thing is the calculations are now going down. Our original assumption is it would be something like 600 or 700 flights, and it's now significantly been reduced from that. But it's still a lot of rockets that we've got to send up there. It's a lot of rockets.
So you're going to have to call into SpaceX
SpaceX, Blue Origin. There's a number of folks out there that could do this. It needs to be probably one of the commercial guys. Just because frequency is their business. The more rockets they can fly, the more money they make. So really that's whereas the government-led organizations are really much more tailored to, a few flights a year. We walked around IAC, we met with all of the launch vehicle guys there to get an understanding of how many rockets they can launch a year. And it's a lot. I mean, there's a lot of satellites going up in space at the moment, tens of thousands that are scheduled to be launched in the next few years. Now, they're launching dozens of those per launch.
Yeah, sure.
There's a consequentially less number of rockets. But there'll be a number of, we need to do a lot of launches. The actual area we're not disclosing because it's still in process. And the number of rockets will eventually figure that out. Our goal right now is to get the prototype up and get some really good measurements done. We recognize there's a number of people that are going to be very interested in us being precise about this. So what we have to make sure is that this doesn't negatively affect anyone. So basically our goal is to let the baseline be as it is, whatever the world is currently tolerating, and not act to change that baseline. We just want to try and keep the baseline where it is. And that should be, hopefully, a satisfactory objective for everyone. Because I think whether you're on the right or the left, you don't want to move your farm 50 kilometers to the north, your winery 200 kilometers to the north. You want everyone regardless of where they are on the political spectrum, you want things to basically be maintained. If you're on the extreme left of the spectrum, you want the kind of things to be in place that enable the rest of the work that has been created in part by their activism. You want that to be maintained and accelerated if possible, but certainly you want it to have a really good result. And so I think this is potentially, I don't want to come across like, too much of an optimist, but I think there's something in this approach for everybody. I think it's a scientifically valid, commercially doable thing that we can get done within hopefully a 5 to 10 year time frame. We can start seeing some results from it.
Interesting. And can I ask one other question? Maybe it's a bit of a leading one because we've kind of preempted this in our preparation conversation.
Sure.
But what lessons can be applied from the carbon markets? Because I think your intention, if I'm not mistaken, is to look at quantifying those the temperature reduction through a similar and analogous kind of approach. Not carbon credits in the tons of CO2 equivalent context, but more of a temperature reduction type of credit approach. Is that still the
it is, because look, what we're doing is going to reduce emissions. It's going to stop permafrost unfreezing. It's going to stop peat evaporating. These are unbelievably important things that we can do on an unbelievable scale. So this is, talk about driving through the unknown to $1 trillion outcome. This is one of those kind of projects. Where we don't know what the outcome looks like, but we know what the size of that economy is. And the size of the economy of saving the permafrost, of saving peat from evaporating in tropical islands in Indonesia, this is a wonderful outcome if we can achieve it. And so that outcome can be, it's probably impossible to quantify it on a planetary scale, but you can get within a range.
The potential's evident.
The potential's there. So that's how I would quantify the effect of this particular project. In terms of carbon markets as a total thing, I think you've got to apply the same approach. Like you've got to say, how much can carbon capture do to tamper down carbon dioxide? What are we doing to capture methane, which is also a big problem? If you look at the methane plumes, to call out a couple of countries in Central Asia, if you look at the methane plumes above some of the stands, they're unbelievably large and they need to be reduced. Well, why aren't they sticking a Bitcoin mining facility right next door and piping that in there and running the Bitcoin mining off the methane? There's so many smart ideas that are being done in places like Texas where they don't emit as much methane. Why? Because they're using it for commercial purposes that also sound like science fiction until they're science fact, until they're a commercial reality. So there's a lot of things we can do for the good of the planet that have good commercial outcomes that are in our industry, that are in our carbon credit industry. And so I'm very optimistic about how all these things can come together to be used, even with the Trump administration, as we talked about, even with these giant methane plumes. Things that seem unsolvable will get solved with commercial solutions. Within the next 5 to 10 years, we'll start to see a movement towards a lot of these larger scale projects, including EarthGuard, including larger scale carbon capture, larger scale solar, larger scale renewables, run by the energy companies with energy distributed via their systems. And hopefully more ETS type schemes of the type that you see in China and Europe, and more of that as well. So now that we're talking about it in an optimistic frame of mind.
But I love that.
But I see broad reason for optimism in our space, and certainly to finish off from the investor standpoint, people are going to make a massive amount of money if they back the right kind of projects in these spaces. If they back the wrong kind of projects, they'll still feel good about those projects because they're doing a bit to save the world. So even as an investor, there's a broad range of projects you can invest in. I would encourage everyone to go through the same learning process I've been through, but know that there are some things out there that you can invest in the green steel, green carbon, green steel, green coal, green energy broadly, green hydrogen, all the things that Larry Fink has talked about. Investing in these things is a no-brainer. There are models out there that work commercially. So I would encourage investors that are broadly interested in doing something for the kids, saving the world, look at decarbonisation, go through, do the learning, find out what you like and what you're interested in, and put down some money in there because it will be commercially viable and you'll do a good thing for everyone on the planet.
I love that about you, and not only the sense of optimism, but the willingness to back those ideas. So thanks, John. I learned a lot. Congratulations on the success at Hatcher, and
thank you.
Continued success on EarthGuard and all the other endeavors that you're involved in. Thanks very much for sharing your experience. From a lumberjack to a orchestra conductor to a tech investor to a CEO to in space, and now all the way through to being an investor in everything, including carbon. So yeah, straight line. It shows folks that the journey is the actual.
Well, keep doing what you're doing, because that's super important as well, mate.
Yeah, thanks, mate. I take motivation from folks like yourself and all the other people that I get to meet in my day jobs. I'm doing multiple at the moment, so don't ask me how much I sleep. But it's really exciting, because so many people are so passionate, like yourself, focusing on problems and then really sinking their teeth into them and trying to overcome those problems by providing solutions. And so, the resilience piece that you talked about as founders is key, and we need more and more founders to just continuously come up with these grandiose and crazy ideas and just pursue them.
Resilient investors, resilient founders. You put those two together
and you get some good outcomes.
You can create some great companies.
Fantastic. Thanks very much, mate. I appreciate the time.
Thanks for inviting me. Thanks for having me.
Pleasure.
Cheers.
Cheers.